Welcome to Kaplan Professional Education's 5 Minutes with the Industry. I'm Victoria Papandrea, and today I'm speaking to Alison Maynard from the Financial Ombudsman Service about some helpful tips FOS has for financial advisors. Alison, thanks for joining me today.
You're welcome.
Alison, in response to ASIC's recent shadow shopping report on retirement advice, FOS came up with some key tips for advisors to keep in mind during the financial planning process. Can you tell us more about that?
We had a bit of a look at, what we had seen in the disputes that come to FOS and came up with our top 10 tips for advisors. Tip number 1 was keep good file notes. So what we would expect to see is that file notes of conversations around a person's circumstances, around strategies, around products, that there are good notes kept. In addition, if there are communications over the phone, we think it's really good practice for the advisor to just shoot off an email back to the client saying, look, I confirm our telephone discussion and that I advised you that, we should, hold firm during this period of turbulence, or whatever the sort of advice it might have been.
FOS has a tip called In Their Own Words. Can you explain what that's about?
What we'd like to see is that when a client comes in and gives, it says, what they are seeking as their goals and objectives, that is put in their own language. I don't think clients come in to see an advisor saying, well, look, I'd like a well-diversified portfolio of blue chip shares together with some suitable investments in property developments. That's not what they come in and say. They come in and say, look, I want some advice on retirement, and I'm seeking to have a reasonable income in my retirement. How can you help me do that? Or whatever the case may be. So we would like to see the client's goals and objectives articulated in language that the client themselves have used.
FOS suggests that sometimes advisors need to actually turn prospective clients away. Why is that?
If a client is seeking services that you don't offer, or comes with unrealistic objectives that can't be moderated, then we'd like to see the clients turned away. If they don't fit with the services that you're able to provide, then a lot of problems will be prevented by not getting into that client relationship in the first place, or deciding that client relationship is not for you.
Alison, why does FOS have a tip highlighting that advisors must be careful when it comes to using advice template forms correctly?
It looks really bad if we see a statement of advice that's got incorrect information in it that was perhaps from a previous client, or that has been not completely filled in, or filled in badly, or contains reams of generic information that isn't particularly relevant to the client that is being advised. For example, you might see a couple of pages on the risk of gearing, yet you're not recommending that this particular client engages in a gearing strategy. So why is that information there?
FOS has a tip for advisors about risk profiling. Can you tell us more about that, Alison?
Make sure that your strategy and asset allocation is in accordance with your own risk profiling. If it isn't, then we'd want to see good explanations as to why. And also, risk profiling tools are only tools. There must be very good discussions around risk.
Alison, FOS also suggests for advisors to refrain from providing clients with cookie-cutter advice. Could you explain that in more detail?
You can't give the same advice and strategy to everyone who works in your door, and it becomes pretty apparent on examining the documents and the statements of advice that that's what's been going on. One example of cookie cutter advice that I came across recently was a client who had an income, a taxable income of $42,000 a year, and the statement of advice says, well, look, we've recommended that, you use a gearing strategy because of the high tax rate that you were on. And, I really query whether that was just generic advice.
Just finally, Alison, can you explain why FOS has flagged the need for advisors to be able to understand and explain the products they're recommending to clients?
Don't recommend products that you don't understand, and you must clearly be able to explain the risks of the product and the advantages of the product in your statement of advice in language that the client can understand. Don't cut and paste PDS risk disclosures into the statement of advice. It's not meeting your obligations. Demonstrate that your understanding of the products by putting the words into the statement of advice that you have used to explain the product to your client verbally.
Alison, thank you so much for your time today.